How about something about like how to position for a big base? How to make the most of the best chance?
How about leaping off a big base?
Yeah.
Good afternoon, everybody. It's your boy, Chicago Sean McLaughlin, and your other boy, Steve Strazza. What's up, Steve?
Hey.
This is the options trade of the week. Usually JC joins me on these calls, but JC is busy sitting through some TPS report meeting, I think. So he can't do it today, but that's okay. We got Strazza. Strazza is better looking anyway, so this is better for everybody.
And I like to be on for the leaps. I think from now on, whenever we do leaps, Strazza.
Oh man, well you gave away the lead already right off the top. Man, no suspense here for Strazza. All right, let's get right into it. We are bullish on the big pharma space. You've got a chart that you want to show here of three big pharma names that their charts are just starting to emerge from some monster bases. Why don't you talk about this chart a little bit, Strazza?
This is my favorite pattern. We've seen it a million times with tech stocks taking out those .com bubble highs. They tend to be slow to materialize, these setups, so you want to be very patient with them. But when they are ready to go and you get that reaction higher, it's typically a very strong up leg. So that's the bet. That's the bet we're making, right? So something like Merck, we have these former highs that were just finally taken out, tested them a couple times, absorbed that overhead supply. You know, if buyers really take control at this level, we expect a big move higher. And then what would be, I guess, the best option strategy for a pattern like this? Why do we tend to use leaps for these big bases?
Well, you know, if you're looking at this chart and imagining that this was a daily chart and we were looking at 1 year of prices, then, you know, you probably want to do a trade that gets you in for the next 3 to 6 months. But that's not what we're looking at here. These are monster bases. We're looking at 2 decades, 3 decades worth of prices here. And so we want to give ourselves as much time as possible to participate. And so we looked at leaps. Leaps are long-term anticipation plays, right? Or they have long-term to expiration. And so we looked at January 2024 calls. That was, there were some June 2024 calls available, but the market seemed a little thin on those. So I decided that was a little too far out. So we went to January 2024 and we purchased the 100 strike calls. We paid $7 for them. They've changed in price a little bit since we got in. I think they're up a little bit, which is nice. I'm looking right now. Yeah, they're up a little bit. Nothing to write home about just yet. But hey, this position gives us 16 months for Merck to make a move. And with Merck trading around 91 and change right now, at the very least, we think that there's a $100 roll in the cards here. And a $100 roll, if we're buying 100 call strikes, our position will play pretty nicely with at least a $100 roll, and probably have a good opportunity for us to get out of half of our position, which is what we like to do with long calls, and especially what we like to do with leaps, is if we could sell half of our position at a double, in this case, we'd sell half for $14, then that leaves us the remaining position with zero risk in the trade. We've already taken out our original risk capital, and then we have, you know, maybe a whole nother year to ride that thing, risk-free, sweat-free, sleep, you know, don't have to worry about our sleep. Just let the thing go and see what happens. And that's when good things happen.
Yeah. I mean, totally. And this is what the chart looks like when you zoom in, right? So short term, still sloppy, still messy. With these bases, we don't know when they're going to go. We just know we want to be involved when they finally do go. This gives us January 2024, almost a year and a half. Look, and again, if this starts working, and we get this breakout of like these highs at 94, start moving our way to 100, you're probably going to be able to take half off pretty soon.
That's what I'm thinking. If we break those highs, for sure, we should have a pretty good opportunity to take half off at that point. But yeah, I mean, the beauty is, Strazza, like we said, we have a lot of time for this to play out, and we need a lot of time because this is a big base, and big bases don't just, they don't just double overnight, but they do provide nice support. And, we have a lot of, at this point, you finally have a lot of long holders, maybe people who've been in this trade for a long time. Everyone's winning. And when everyone's winning, hey, people like to continue winning. So no reason to take profits off the table. They're going to keep pushing this thing up. At least that's the bet we're willing to make. Now, look, let's be real. If you bring up that daily chart here that you had there, let's talk about risk management for a sec. We still, while we've defined our risk by buying calls, right? With $7 is the most we could lose on that position, right? That's the most we can lose. But I'm not just going to let it all ride. I've got two different levels where I'm going to use as a stop loss. Number one, the price action of the Merck stock. If Merck can't hold above $87 a share, which is kind of below that peak or that dip in early July, I believe that was. Right there. Yep. If we can't hold above that low, then that tells me we're early or wrong. Either way, I'm going to cut the position, and it shouldn't be that big of a loss, but it'll be a loss, and we'll cut it and move on. The other stop loss I have, Straza, will be in the actual value of the calls. And I don't do this very often. I like to rely more on price action and the charts to tell me I'm wrong. But in this case, if the calls lose 50% of their value, so again, I paid $7 for them. If they get down to, like, say, 350 or below, that's going to be my other reason to exit the position, cut my losses, take a 50% loss on it. But hey, it's better than losing everything, even though we're fully prepared to lose everything in a worst case scenario and we've sized the position properly. Hey, if it gets down below 350 and we have an opportunity to exit, we will cut the losses and move on to the next idea.
So you say you don't do that much. Is that basically a time stop? Is that why you're adding that element of risk management? It's kind of a time stop. If we just go sideways.
Right. It is a time stop because there is such a long duration in this trade that, I don't want this thing to just be dead money for 8 months or 10 months. I'd rather just look for a better opportunity to get in later when the thing sets up better. So no reason to sit in a languishing position for 18 months if it's decides it doesn't want to go. So that's why I have that stop on the calls, on the value of the calls. If they get at 350 or below, I'm out. Or if Merck trades below $87 a share, that's my other, I'm sorry, not 87, 80. Yeah, 87.
No, yep. And I love that time stop component to this because something we see with these patterns a lot. And look, you could have gotten in this trade, the same thesis, here, months ago, years ago, and it's been dancing around, still absorbing overhead supply at this level. We really only want to be in it if it's working, right? And we're getting a leg higher and a resolution from this base. We're still just chopping sideways. We don't want to be in it. So that time stop will get us out. I like that a lot.
That's right. So that's our trade today, guys. We're long Merck. We're long January 2024 100 strike calls. We paid $7 for them. We're looking to sell half at 14 at a double if we can. And 87 is our risk management level, or if the calls get cut in half. That's where we're at. Straza, thanks for helping out with this trade today. We discussed this during our morning meeting with our analysts this morning. I like it, and I like it that it gets us long in a sector that just continues to win. And if the market has indeed found a bottom, I suspect, and I believe you suspect as well, that this sector will continue to lead the way.
I like it a lot. There's a lot working in healthcare right now. These are some of the best looking charts on a structural perspective.
Right on. All right, thanks for joining me today, Straza, and thanks for all of you for tuning in. We'll be back next week with a new trade idea. Take care, everybody.